Hi traders, TGIF. I hope you all survived the week so far. That's not like my colleagues. They're all falling like flies here. Today I'm going to run a one-man show because Stelios has a little bit of issues with his car. I hope you guys are okay with that. It's going to be a fast one, just hello and goodbye today. No, I'm joking. Right, so let's, first of all, congratulate West Ham on their victory in Amsterdam. And they are going to play a European final as well after, I think, 47 years or so since the last time. So congrats to them. Ryan will be happy. He will be back with us on Monday. Yes, Kevin, I think he must have a sore head. I'm not going to divulge anything. I let that to over to him if he wishes so on Monday. Right, in the news, and actually, there's not been much world-shocking news overnight. So we are still waiting for what's to happen with the debt ceiling, but both parties are pretty positive about it. Biden is in Japan, in Hiroshima, right now for the G7, but he cut his visit short. So he'll probably be back in the States on Sunday to try and press a deal through. So that is already our weekend risk right there, to see if we get any news about the debt ceiling on Sunday night before the opening of the markets on Monday. So that's going to be something to look out for. In the meantime, as I said, we have this G7 going on in Japan. There's a lot going on about most actually is turning around what they want to do with Russia. Now they already agreed that they are going to put more sanctions on ships, aircrafts, and diamonds as well to put more pressure on Russia. And then there's this interesting thing as well going around towards China. And I read a couple of interesting articles, and one was talking about nobody wants to cut ties. Nobody wants to completely decouple from China because economically they are just too important for the rest of the world. They are still one of the biggest world's manufacturers, as we know. So they're more talking about de-risking from China instead of decoupling from China, and they're trying to find ways to get a little less dependent on China, which is keeping the Chinese yuan on the back foot. But we have seen overnight that the yuan made a low and then started to recover a bit this morning. So we'll come back to that a bit later. Also, regarding those US-China ties, US has agreed with Taiwan on trade terms. Next week, there should have been a Chinese delegate going over to the US to talk about trade, and but having agreed with Taiwan on those trade terms, that is clouding the picture a little bit for next week as well. So that is one other thing to watch out for, and I'd say especially if you're trading. Let me kill the squawk for a bit, especially if you're interested in what's happening to the Chinese yuan right now. The dollar has probably on itself bigger things to think about. Staying in China, there was this other line saying that China considers moving stakes in bad banks to the sovereign wealth fund. That looks to me like they're planning on doing a little bit of a Houdini with all those bad loans and putting it in the sovereign wealth fund. That is to make it disappear in the big 3 trillion or whatever it is dollar equivalent holdings of China, and just brush it under the carpet at some stage. So that's another one. And I think when that came out, that's when the Chinese yuan strengthened just a little bit, because if you take it away from market risk and you put it in the big Chinese liquidity pot, which is more than big enough to absorb all of that. That is helping probably the Chinese yuan a little bit this morning as well. And I've also seen, and that's the last line in China, that Europe's biggest asset manager, Amundi, is actually investing more in China now because they think that the whole de-risking, the whole nervosity around China is a bit overblown right now. So, and that's pretty big statement from the Amundi, which is, as I said, the biggest European asset manager. So that is also alleviating some of the pressure, I think, on the Chinese yuan right now. And when you're looking at fundamentals, when you look at what is driving markets, those big asset managers having so much funds to allocate left, right, and center, if they decide to go into a country, we have seen what it can do to Mexican peso, for instance. If they decide to go into a country, we as our little participants in the market, we just can't ignore it. All right, thanks, Gav. That's an interesting one. PBOC apparently is saying that China is to curb speculations on the yuan rates when necessary. And we're just seeing the CNH strengthen a little bit more. So let me have a close look at that later. And the dollar is actually a little bit on the back foot, thanks to that as well. Seeing euro dollar going back above 108 and the rest of the currencies behaving a little bit better as well. Right. What else is there? So then moving over to Japan. And let's straight away have a look at what happened there because everything is linked here. The Japanese CPI came higher than expected. This was a bit of an optimistic expectation because already we had seen in the past few days that the expectations were for the number to remain high. And indeed, it came in high. The core CPI also rose compared to the prior month. But then we had already Ueda. He didn't really comment on the CPI, but he had a speech out a little while ago about the Japanese monetary policy review. And he said, well, he acknowledged that there had been quite a bit of side effects in the past, and he was going back like 20, 25 years, right? And that was in the start of the 2000s. But he then said that for the time being, the monetary policy easing is still the best way to handle things, including YCC. Now, we've been saying a lot of times that yes, we are going to see normalization this year. There is very little doubt in my mind. Of course, we may be wrong, and they may keep everything the same. But looking at the style of his communication and the way he still continues to talk about those the YCC and everything, it's going to be a slow process. So one of the things they may do is for instance, reduce or bring maturities closer. Instead of pinning down the 10 years, they may come down to 7, 5 years, 2 years or so. But for those expecting that Bank of Japan is just going to let everything free or set the whole monetary policy free and let the market decide, that is not going to happen. That is definitely not what the Ueda is telling us at the start of his tenure as Bank of Japan governor. So again, he was repeating it today. Quite surprising, he did not particularly comment on today's CPI. He did say that he still expects CPI to come back down closer to 2% later this fiscal year, but then after that, it could be that the CPI starts to rise again. So it's very vague, but in the meantime, still very confident that CPI can come back down in this fiscal year. Right, next. So yeah, yesterday, and then we are going back over to numbers. So a lot is going on, as we know, about this debt ceiling and what it means to assets, what it means especially for yields, and what it could mean for treasury bond issuances. And there's a lot of debate going on about it. So but first, going over to the numbers, and then when I will show the yields, I will explain a little bit more about what's going to happen or what could happen on the treasury side. So yesterday we had those jobless claims. They came back down a little bit. So we are not going to call this this streak of higher numbers over, but we do see that there's less stress than what we could have feared with the start of these higher numbers the past few weeks. The Fed, bit of a mixed bag. The employment index came back a little bit, but then the conditions, while still being negative, they were not as bad as they were expected, and especially it's been a lot less bad than other indicators might have told us the past few days. So the manufacturing index dropped from -31 to -10. We had this gradual move up in yields as well yesterday, and when those came out, we had this little uptick as well, taking us through 360 on the 10 years, for instance. The housing market is still limit border. We know that it has been coming off slowly, gradually. That again was a drop here in the existing home sales, but it's still no massive drop. So for the time being, the market is not viewing this as alarming at all. Otherwise, we wouldn't have seen the equity markets push up as they did. We had a bit of auctions yesterday, less hot than before on the real short term, which is covering the debt ceiling possible X dates. But we saw the 8 weeks, so the market is not completely confident yet. We saw the 8 weeks bill auction spike above 5% again. So we have to keep an eye on that one. And the real interest rates, and that is keeping the dollar also bit in a way, is that real rates, that is inflation adjusted auctions. Those rates, those yields are ticking up. So real higher rates in the US or in a country, let's say, is usually underpinning the currency a little bit as well. But it's, of course, in this market, it's not all about yields. Mexico kept the rates still as expected. They were talking about inflation. Inflation is starting to show signs there as well to come off. Interestingly, is that over the next year and a half, they are seeing inflation actually drop quite a bit. But there wasn't anything really in the statement saying that they are going to start to cut. So the MEX was relatively stable. We had, as I said, a little bit of position adjustment ahead of the decision, but since then it's been quite stable, the Mexican peso. But as I'm always saying, it's tough to be short an 11% currency, especially being so close to the US and one of the US manufacturers now for a long time. So unless we are seeing more moves, I was expecting dollar mix could actually move closer to 18, but keeping it still and having absolutely said nothing about growth or inflows, because they know that the world is piling into Mexico right now. They haven't said anything at all in the statement, so they were very, very vague about it. And I guess it leaves the market scratching a little bit, or at least it doesn't put any more downward pressure on the mix right now. Fed's balance sheet, well, I mean that's the usual roll-off or the usual QT. I don't think there's anything spectacular in there as well either. We're seeing a little bit better data coming out of New Zealand there. Imports still have slowed a bit, but the export have grown a bit. So the balance there is okay-ish on the month-of-month. Kiwi has been very resilient of late, I must say, after that drop on the base of the lower inflation print. Kiwi is really being very, very resilient the last couple of sessions, and I've been saying that in our chat room as well. It's one of those. I thought Kiwi was actually going to suffer a little bit more, but nothing of the likes. It's remaining quite big. Over to today, covered already the Japanese CPI. On this Japanese CPI, I do think that it's 15th of June is the next Bank of Japan meeting, and as I was saying, it's a bit early now, but I do expect a bit of speculative upward pressure on the yen starting in the week prior, or the week and a half prior to the Bank of Japan meeting. That's all very possible. I wouldn't really rule out the yen to trade just that stronger going into the Bank of Japan, but it's too early to really talk about that right now. For the rest, well, German PPI holding up, stubborn versus expectations, but still coming off versus the prior numbers, and the revision was also lower. So that means that in Germany, the price pressures are coming off. We have seen it already. Lagarde was out earlier this morning. She didn't talk about those German inflation data, but she did say two things. She said that the ECB is still going to be courageous to take decisions to bring inflation back to 2%. So that clearly means, I reckon, that she says we are not done yet. But she also added that line that that they are heading towards more delicate decisions going forward. So that, I think, rules out a 50 BP hike for the ECB next. So I think the best we are going to expect from ECB in the next meeting is going to be a 25 BPs. But the way that Lagarde is talking, it's probably going to be the case. So in between, we had also the UK consumer confidence out for May. It's still a very negative number, but this number has been gradually getting better, coming from the abyss here in 2022. We are now back to levels that we had earlier. And the articles that I saw in the FT are saying that the UK consumer is looking a bit more positive towards everything, and the analysts are pretty positive towards what's going on in the UK right now. Again, it's still a very deeply negative number, but we have to acknowledge the trajectory of the improvement, right? What's next today? There's very little today. For the MEX watchers, we'll have the retail sales. For Canadian watchers, we'll have the retail sales there as well. Note that they are both March numbers. They are not April numbers. They are still Q1 numbers. So the effect should not be that big in the market, but the market being a little bit on its toes, we cannot exclude some algo moves on the back of those. Then going forward, we still have like a bunch of speakers. We will have also, although the G7 has already issued some sort of lines, we may still have some of those G7 participants coming out with comments. And looking at the time it is in Japan, those comments could get a little funky if they do it after their barrel of sake and after their dinner. So keep an eye on those. And then later today, we have a bit of a powwow between Powell and Bernanke. The market is expecting stuff about that, but we know that Powell is really very apt at walking very fine lines. There is one thing that probably the risk or a potential risk or something that may be is that we can't forget that Powell was an advisor at the time that Bernanke was there, and Powell actually at that time was not pro injecting too much money, was not pro going to zero interest rates, although he did it himself afterwards. There is this little tiny bit of risk, and yet again, and again, it's not my base case. I think they are going to be very diplomatic, both of them, but that we have a little bit of a discussion between an ultra dove and a baby hawk. Let's call Powell the baby hawk, and that is perhaps what the market is going to cling on to, or try to pick some words out of there. But to me, it's more going to be an algo boost in any way than or in either way, I should say, than really taking a direction for the market. That's it for what's about to happen and what was. I don't have anything more. If you guys want to or if you saw anything that I may have missed, please put it on the chat. I've only got 2 eyes and half a brain, so please, if I missed anything, I'm happy to talk about. Oh yeah, last one is that, but still, I don't think it's going to change anything because there's no stress anywhere. Is that we have Moody's revision of Italy tonight. Those are regular revisions. There's nothing that we should be alarmed about. So, but just note it's there. They're probably just going to confirm what the Italian ratings anyway. Okay, let's have a look at what's happening in the market. Euro dollar. We've been looking at this trend line here, and yesterday we had like this brief move below on the dollar strength, but it's kind of reversing today. I guess, well, the PBOC did something there, and although I think that this morning it was like very hesitant, because I reckon that some model funds still had some probably some triggers to buy a few dollars. It looks like the dollar is much more neutral today. So finally, it's holding, but still keep an eye on where we close tonight. I'd say perhaps after Powell Bernanke, who knows. This 60-75 zone is where we should really be paying attention to, and the kicker, if the dollar regains strength, is going to be here, 107.25.35. If that goes, then I think a lot of players will think that we may be on our way back to 105. So we are at very interesting levels. My base case that I've been talking about is that we are still in broad ranges, but that's my base case on this. People know that I've been trying to catch a knife here. Mike, I'll come to that. So I bought a little bit here yesterday around the line. I said I would, so I did. I've already managed a little bit. I don't think there's a lot to be expected, and this move above 108 triggered a little more management. I'm trading this on a short-term basis. If it holds for the end of the week, I'm probably going to keep a little bit to see if we can get back to 109 perhaps a little later. And then to reply to you, Mike, yeah, we know that the ECB is going to continue to raise rates. But rates is not everything, you know. We've seen those German data coming off as well, the industrial production and stuff of late, and the dollar as such has gained quite a bit on the back of the debt ceiling, and perhaps it's a case now that I can talk about those yields and what's going to happen. So there could be a double whammy here unfolding on the debt ceiling. So first of all, this is not the same debt ceiling issue that we had back in 2013. There are similarities about everything, but first of all, there's a lot more cash in the markets right now. And there's a lot also more need for debt, because we know those Biden plans for infrastructure and everything, they will have to be funded. So in 2013, once the debt ceiling issue, so during the debt ceiling issue, the yields were spiking as well. Then we had a decent setback, but then they spiked again because of the issue that there is with the Treasury needing to fund. And I've read somewhere, I didn't make the calculations, but someone said that it may be up to $1 trillion that they have to reissue in debt once the debt ceiling problem is going to be resolved. And in 2013, we saw something similar, and we had this another leg, another decent spike higher in yields before the big drop started. And that may be a similarity today. So we've seen those yields spike, and in the 10 years as well, because the people in the market is expecting that the Treasury needs to issue all those bonds again, and we'll keep those yields going. But we may have an initial little bit of a setback, and then that later spike. Therefore, it's important to watch what's going on here. This is the 2 years. We are at interesting levels here, right? 4.25, 4.27, 28. Stretch it to 430. It's pretty important. So I'm not saying that today something is going to happen with that, but we have seen it capped here for now. Okay, so pay attention to what's happening for that towards the close of the week. If we see a little bit of a setback, your dollar is likely going to see a little bit of a setback as well. 10 years. Look, same levels, huh? 364, 365, bit of an overshoot. We are there. We are there. And same thing there. Keep an eye on where this closes the week and where it opens on Monday. All right. So the 2 and the 10s are usually your main drivers for what's going on in stuff like dollar yen, for instance, for sure, but also what's going on in the rest of the markets. And if you want to know what's going on in the euro dollar, the 2 years are the most actively watched. Let's put it that way. I'm not saying actively traded or whatever, but if you look at what happened there, the setback of euro dollar is there. And I also highlighted this zone here. We're coming in relatively good support. We are trading. We went down into the support zone, and look, when we did the lows, it's around when we did the lows in the euro dollar. So keep an eye on that, on those charts. They can just show you where the market stops. And since there's a lot of correlation in the euro dollar with this one, this is where you want to watch your euro dollar as well. If we start to close the week or open the week below 150 BPs, so wider than, and this is an inverted chart, right? So wider than 150 BPs between the euro and the dollar, likely your euro dollar is going to continue to suffer. Okay, for the time being, it's holding, and that's a positive for that euro dollar right here. It's nearly an overlay, right? You can overlay those. So that's a little bit about the correlations that I'm especially watching as well. Yeah, sterling is resilient. Sterling is resilient. We did break that little channel that we had here, and cable accelerated. Stopped yesterday around prior lows, but a little bit in no man's land, I would say. I called a little knife there as well around fixing time, just because I agree that the sterling is relatively resilient right now. So you don't want to start buying it somewhere in the middle of ranges unless there is data news and clear news. But we're seeing lower lows on in the short term, but in the more longer term, it's still relatively okay-ish. So I'm just playing it for small rebounds. I'm not planning it to keep it running. we're already getting closer back to our 124, 40, 50 magnet zone. So I reckon that is going to be your level to overcome. And then if it goes there, I think 124.80 might already be enough for today, really. I'm not sure if we have the strength, unless the dollar completely reverses. I'm not sure that we will have the strength to get it back into the 125s. But at least it's showing some resilience again. And we find it back in the euro sterling. And I'm going to go on a actually going to go on the 1 hour, and lines or fibs don't really have too much importance on this one, but I'm just looking at these bounds that we had up to 87.32 again. Then we didn't manage to make it above 87.20 a couple of times. Yesterday we're already struggling around 87. The figure idem ditto this morning. So if you take that into account, sometimes you have to know how resilient or how weak a currency is. You don't only have to watch it against the dollar. You watch it against other currencies where the crosses are doing. Mike, what about the analysts saying that all the good news are baked in sterling? Yeah, well, analysts are paid to say stuff, right? I don't know. I still think I'm not sure whether all the good news is baked in, but I'm also seeing that a lot of news is very similar to wherever you look in the majors environment, right? So whether it's baked in or not, I don't know. Crosses are going to tell me whether a currency is really going to start to be weaker, or in turn has room to get stronger. When we look at all this, and then you go over to the yen, the story of the past week is a dollar story, right? It's all about the debt ceiling. It's all about positivity, liquidity. It's been a complete dollar story, and we have seen it in not better than in the dollar yen. But then, as I say, if you look at how a currency behaves, then I'm rather going to look at crosses to see, as a judge, whether the currency still has some power, also some strength in it. So and then I bring it back over to dollar pairs, for instance, to see whether I'm going to catch a knife. My base idea, and I've been talking about that, was that currencies are still in broad ranges right now. So yes, we've had dollar strength for a week or a week and a half, but can it go much further? The jury is out on that, and that's the close of this week and the opening of next week is going to tell us more about that, and perhaps more even the opening of next week. Sorry, because we will have had the Biden McCarthy meeting likely on Sunday, right? Okay, yen then. That little thing really exploded, and it was explosive thanks to two things. One, the US yields. Two, the equity markets rallying very hard. We've seen the Nikkei as well putting in highs that we haven't seen in 30 years, and all of that has pushed the dollar yen and the yen pairs quite a bit higher. So we broke the channel, we broke the trend line resistance here. So that's happening now today at 137.70. Call it half three quarters, 137 half three quarters. That's your measurement point for the dollar yen today, where we are going to close. Since the data calendar is not too packed, we're going to have to see what the speakers are doing. Perhaps Powell is going to tell us something. Ueda has already said what he had to say. I'm not sure that on its own this can break back down below today. So I reckon that we are going to close somewhere in the middle. I don't see too much of a reason to go and take the 138 3/4 out. But if for whatever reason US yield are starting to ramp higher again. I've got decent resistance around 139.60 to 139.90 on the day. I know a lot of people talking about the 61.8 here at 142, but I doubt that on the day that we will have the power to, or the power to get up there. Euro yen still pretty interesting. Yesterday we had a move above this 149.25 resistance. We're still not far away from there, but we couldn't get above 149.5, which is a 61.8, and that's that was your Japanese CPI coming out then, which drove the yen a little bit stronger during our night. We're still not far away from there. If you look at yields, the way they go, it's a bit logic that we continue to hang around the higher levels that we have seen over the past weeks. On the downside, keep an eye on 148.60, and then the other level here is around 148.40. So you have 20 points of support zone here if it would come a little bit lower. If the market has enough of selling yen for the end of the week, we could perhaps come and rest on this little zone here, but I'm extremely neutral on that one for now. Aussie and Kiwi, yeah, yesterday both Aussie and the Kiwi all of a sudden told us that they had enough of coming off. We had a test here of the 66, the figure on the Aussie after having broken the support line, but overnight we went back above, and I don't know. I don't think that there's going to be enough weakness in the Aussie today to start to come off again. So I would not be surprised if this on a retest holds here, the 66.30 zone again. I'm just saying I wouldn't be surprised. I really think we are going to be in ranges until the end of the day. But there are a couple of interesting levels here. We're just hanging around the 66, 60, 65. That's going to be your intermediate hurdle. If that would go, we may have a retest of 67 before the day is over. But again, the move is already petering out there in the dollar. It's all euro is already back below 108, and the cable is already rejecting that 124.40. So ranges. Kiwi dollar, have a look at that. This was the drop after that. No, this was the drop after that CPI number, and then it bounced already. Then you have your dollar demand that we saw across the board, but it never made it back under that 61.90, 62, the figure area again. And we are again already pushing higher. And if you look at this, this is looking pretty strong. We have resistance here. Okay, we have resistance in that 62.80 up to the figure. We have resistance in the Kiwi, but if there is a little more dollar weakness or just a healthy setback on the dollar, I wouldn't be surprised if Kiwi is still the main beneficiary of the day, because this one is resilient. Looking in a comment again, market is about too optimistic about the dot ceiling being resolved this Sunday. When the opening rates, absolutely, that's what I said. I mean, it will all depends what they decide. And the thing is as well, is that it will all depend what kind of can they kick down the road. If they say that they're only going to do, if they only put a plaster on the wooden leg and kick the can only into September, my thinking is that risk is going to get a slap on the back of it, because the market wants to see longer-term resolutions of problems, not short-term resolutions, and kicking the can only a couple of months further down the road until after their holidays. That's I think the market wouldn't like that. Gold, Ali. Yeah, so you have your 1960 here. There were also prior lows here, but we haven't been able to test them. I think this is a bit of a stop run that we had on, call it the very short-term peak dollar demand. We're above here now. I think you can correct back to this traffic zone 1970s. It's all within the possibilities. Do we have the strength to go back to 2K a day like today? I don't know, unless you see those yields starting to come off. That is going to be your driver for higher metals. We're going to be followers of fashion in this one, and the fashion is your yields, I reckon, right? If we start to get back below yesterday's lows, that means that there's more than just a stop run. If you go below 1950, there's going to be another little psychological knock on the head, I think. But then there's this more medium-term trend line, and that comes in around 19.25 right now. And to me, that's going to be a bit the do or die level for gold. And it's also not too far from where we saw spike and drops here, retracement before we went up to the close to all-time highs. So that's your zone here, 19.25 or 1920 if it takes a bit time, 1920, 1935. That's your do or die zone for me on gold. Okay. Silver. That's the channel here. That's the channel we broke out. As we can see, we have enough tests and tries to justify this channel. Yesterday, a little bit below, but holding this level here from the big decline around 21.37. It has been a level of interest. Look at this, look at this, look at this, 23.37, sorry. Look at this traffic zone. So channel, if we break it for the end of the week, okay. Downward pressure. Is it long lasting? We don't know yet. We have to wait what happens on the start of next week again, I reckon. Then it's going to be about intermediate interesting areas. I think 22.25 is going to be one, and then the big one here, I think for now, is around 21. And as I've been saying already before, I'm working around a long-term long. I am trading it a little bit more dynamically. So I did let some go. I did start to reload a little bit of what I let go here, but I still got a lot of room to add here and then here. By the time it comes here, I'll be not even fully loaded yet. But then is for me, if or when we see it here, decision time. If we start to go back above 24.40, 24.65 or so, that's going to be equally decision time. Then I might decide to push some buttons and thinking that this move is done, the correction is done, and we start to go higher again. So that about those ones. I need to have a quick eye on the S&P, right? We're in an ascending wedge. Market was doing a lot about prior high, about 4,200. We are through. We saw a bit of stop loss hunting. We can need an extension to that, no problem. Today, if the market remains positive, up to 42.35, I reckon. Is there enough power to go much higher? That'll depend on any news. We never know. One of those politicians can come out and say, like, hey, our staff level negotiations went really well. We think Sunday is a possibility. Then this thing is probably going to push through on positivity. But I'm not sure whether it has enough power to get through there. Setbacks down to 41.5, 41.55. I don't think we can go much below. I don't think there is any reason now for breaking down. Okay, so I reckon that set banks today could get bought 41.70, 41.50, 55. Watch those little levels in between. I reckon that's going to hold. Yeah, this one. Sorry, just 1 second. Okay, sorry for this. I had to cough. Dollar China. I'm out for now. It's been a good ride. Been riding it along the this whole move up. I had my take profit in overnight, and now I'm going to go on a mini rant here. I had my take profit in overnight at 707.5, and those bastards, they went up to 707.43. So I'm a bit pissed off. But anyway, I've let the rest go today. I think this is a bit of a decent zone here, and I've let the rest go today because of this 50% here. I'm not saying the party is over. For as long as we're above 7, I reckon there will be deep buyers. But I'm a little less, and I don't want to get overconfident on this dollar China either. We are going to trade the price action from now. I really need to trade the price action from now. And also what's pushed me to get out, and that's where I'm saying about fundamentals and about listening to what the big boys are saying, or the big girls are saying, is when somebody like Amundi says, I want to invest in China, there's some decent amounts involved there. And me as a retail trader, who am I to put in doubt anything that those people do? That was a bit the trigger already for me saying, like, okay, if it goes back down below the 50%, I just take my profit and I'm going to watch the price action on this one right now. Then dollar max is going nowhere. Little update on the rand. Rand is still suffering, and Eshcom yesterday didn't do it any favors. They came out saying that South Africa is to prepare for the worst ever blackouts that there are to come. So if it wasn't enough to already get those warnings and those issues, other issues in South Africa, they are saying, like, well, they're basically saying, don't buy any rand, okay? Whatever happens in the rest of the world, don't buy the rand right now. And yeah, I'm still a bit long here. I still think we can go and see 1975. Aussie Kiwi, yes, support area, right? 106 the figure. Longer term, 106 the figure. Shorter term, 105.85, 106 the figure. We are turning around, okay? But as I was saying, the Kiwi being so resilient, it may have to do with this Aussie Kiwi as well. But this does not look extremely big to me, right? We came back to that level here, 106.75, but it's been rejected quite violently. And now we are trying to I don't know, this looks like a relatively weak pair to me still right now. We can get the bounce. It's a big enough level. If you want to catch a knife, look at what happened here. 105.90, 105.85. If it goes below, I don't want to keep it. If that's the way you're looking at it, Joao, I don't know. This doesn't look very big to me, you know, on the face of it. In contrary to what actually happens on the Aussie dollar, which is looking a little bit better, but the Aussie Kiwi, and that's due to the Kiwi, I reckon, is not looking too big. On the other hand, Euro Aussie is back to, now it's bouncing a little bit here. it's bouncing from the support here. Call it 162, 161.95. After having broken the mini, people call that a bear flag. It's broken through it around 162.70, and it's tested now this support here and the 161.95. So that's your zone for today on the Euro Aussie. Okay, if it goes back up, zoom in a little bit. If it goes back up, 162.75, 85. Okay, that's going to be your level on the top side. That's your playground for the day. If it breaks through 161.95, I think there may be a bit of stop loss run, because me included, but then I gave up earlier, but I was looking to be long at some stage Euro Aussie for as long as it holds 161.95 figure. And I think a few other people are doing exactly the same. So if you get a break below 161.95, confirm it through 90. This may have a little bit of a run. Okay, I'm a little concerned if it goes back down there. Her ratio, I'm in a sterling CAD and Euro CAD shorts, entered after CAD CPI. Thinking holding over the weekend. Yeah, okay, the sterling, I'm not going to put out any judgment of it, because I have like roughly the same idea on both currencies. I also think the CAD is looking a lot better than Norwegian kroner, for instance. But yeah, Euro CAD is has broken this 146.40, 146.15, 145.70. It's trading heavy, right, towards the end of the week. So if you're short, first of all, keep an eye on 145.70, but that's a bit close to the market. But then keep an eye on what's happening 146.15.40. Okay, if it starts to go back above there, the party may be over. Stay below there, ideally a bit of a retest, and then put in the next leg lower, 144.90, and then mid to low 144s could be a decent target for this one, Horatio. Okay, again, sterling CAD, I really don't know. I don't know. I haven't looked at it for ages. Yeah, sterling Aussie is turning around the support line here as well in the 186.60s. Is just trading a little bit above. But look at this trend line. Let me have a quick look on your sterling CAD. As you can see, I'm not following it from very close. Okay, Catherine. What have we done here? Sterling CAD, are you long? Yeah. Well, you're turning around levels here. 167.5. You're there. You are there. And if we take the last leg up from here, okay. Yeah, 167.40 as well. We're turning around. Okay. If it goes up 166.65.70, that wouldn't mean good news, I reckon. But then it's all about oils. Oils are rebounding just a little bit, but stuff like Noki is not benefiting from it at all. But the Canada is doing better, and also with the CPI. Yeah. So I'm not going to put any judgment out here, but you need it to go back above very, very short term, 167.75, and then 168.30, 30.40. If you get this back above 168.30.40, that's going to look very positive, Catherine. Okay. Yeah, we have the retail sales. Yeah. Okay, guys and girls and gals. Anything else before we close the books for this week? No, I take that as a no. Ladies and gentlemen, thanks a lot for coming to the Flow Show every day, make our publicity, tell the people that we are not too bad, that we are doing a good job. I wish you all a very, very safe and jolly weekend, and we talk to each other on Monday. Bye-bye.